Political factors are again exercising great influence on the markets. Yesterday, the authorities of the Donetsk People's Republic, Luhansk People's Republic, as well as administration of Kherson and Zaporizhzhia Oblasts, announced that they would hold a referenda on joining Russia as early as September. What's more, early today, Russian President Vladimir Putin declared a partial mobilization. All these factors are pointing to rising tension in Europe that may turn into a full-scale war. In other words, military and political risks may surge at any moment. They are very difficult to predict and could hardly be controlled. That's why investors have nothing to do but withdraw their funds from the risky area, namely Europe. The already existing tension is likely to increase in the next few days. Against this backdrop, all European currencies will remain under pressure. Now, traders are paying less attention to the FOMC meeting that is scheduled for today. Notably, the regulator is anticipated to raise the benchmark rate by 75 basis points. Yesterday, this event was defined as the most important one of this trading week. However, the situation has changed dramatically. There is no doubt that the greenback will continue gaining in value. And the fact is that investors are likely to put money in the US assets. Markets are even ignoring Christine Lagarde's hawkish comments provided yesterday. The ECB's president said that the regulator would continue raising the benchmark rate at the next few meetings to slacken inflation. And the ECB will remain stuck to its plan even amid poor economic growth. On the chart, we see that the euro-dollar pair failed to consolidate above the parity level. As a result, it showed a gradual decline and touched a support area of the downtrend. Under the current conditions, speculators are under significant pressure exerted by the news flow. That's why we can see some price impulses. If the pair settles below 0.9900 on the daily chart, it's likely to go on falling towards the levels of 0.9800 and 0.9650. If the pair fails to break the control level, it may jump above the parity level. Meanwhile, the pound-dollar pair was hovering within the sideways channel of 1.1350 and 1.1450 for 3 days in a row, touching one limit after another. The movement was defined as an accumulation process. However, at the beginning of the European session, the pair broke the lower limit of the range located at 1.1350. This led to the prolongation of the long-term downtrend. As the result, the quote once again dropped to the levels recorded in 1985, and this fact points to bears' intention to push the price even lower. Traders should keep in mind that the pound sterling has hit historical levels. That's why speculative activity could become very high, thus causing the overheating of the short positions and the technical rebound. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.